talk about Mr. Bull himself, Tom Lee. What's going on in the week ahead as far as economic and earnings? How about a survey from Wells Fargo talking about fake rich? And of course, we can go on to talk about multifamily development. Folks, there's a lot going on. It is Sunday, February 4th, and I hope you're having an amazing day. Let's get into it, folks. Let's start with the week ahead. I think the week ahead is really going to be focused on Fed discussions. Yes, folks, the Fed had their meeting last week, and that means we are letting them get out in front of microphones today. We have no less than 2, 4, 6, 9, 11, 13, 14. There are at least 14 Fed speeches next week and likely more that aren't going to be covered. That starts off pretty hot on Monday with 2 Fed speeches, followed by Tuesday, 4, and that's not even the peak of the week. That will go for Wednesday, where there's at least 5 Fed speakers. This is what we're listening for, right? We are trying to find out who in the Fed is still hawkish and who is leaning dovish. The data unquestionably is leaning towards strong economy and falling inflation, i.e. disinflation, not true deflation. We will start to get some inflation data a week from now, right? So it would be around the 11th or 12th, actually the week after. So there's a lot of Fed speak that I think will move the market. And what I will be listening for is duration, time. Are we talking May, June, aka summer? Are we talking end of year, or quite possibly no cuts? I think there's a lot of things going on right now that may make the average person think, why would the Fed bother cutting? Again, we will see where the inflation goes going forward as shelter inflation continues to lag and roll over slower than expected. On Wednesday, we will also get consumer credit. Consumer credit, what is going on with the consumer? Is that still growing? Can they get access? What's the decline rate? All of those things will be important. Thursday will be weekly unemployment claims. We have a trend in the weekly claims, if you go back a couple of weeks, where it is the slope is upwards. Again, we are not near the 300 level yet, 300,000, nor the more important, I think, kind of 325. But we do have a trend forming. We also have, obviously, record layoff announcements in January. I think it totaled roughly 90,000. That is the roughest January since, I believe, 2008. So not a record to be trifled with. Then on Friday, we will get one additional Fed speech. So a lot of Fed talk next week, not a lot of economic data. But earnings, let's get to earnings. Monday, we'll get Palantir, McDonald's, and Caterpillar. For me, I think it'll be interesting looking at Caterpillar. Right, there's a lot of talk about kind of projects being mothballed, being delayed. There's a lot of finished product coming. So what is going on with Caterpillar, right? Caterpillar is one of those investments you do early. So it'll be interesting to see what is going on with Caterpillar. Tuesday, Chipotle, Snap, Enphase, and Ford. For me here, it's going to be Chipotle on Tuesday, right? Chipotle obviously was a pandemic darling. They have raised prices quite significantly. What is going on? Are we seeing appetites change? Are we seeing taste change? Are we seeing frequency change? Are we seeing delivery change? What's going on at Chipotle? Wednesday, PayPal, Uber, Yum, Hilton, and Disney. I think I'll be looking for kind of Disney and Hilton there. What is going on with vacations? We've seen a lot of pullback, right? UPS in shipping, FedEx in shipping. But are we still spending on services? So I will be looking to Disney and Hilton for that. Thursday will be Tapestry, Harley-Davidson, and Affirm. I really think we've got to look at Harley-Davidson and Affirm on Thursday. Affirm, if you don't know, is the buy now, pay later king. What is going on with bad debt? I suspect at some point there is going to be a wake-up call for buy now, pay later. And I think we will see it in their earnings announcement. It'll be called something like reserve for bad debt or charge-offs. It'll be something like that, basically where their clients are not paying back. And then on Friday, we will get PepsiCo. PepsiCo is interesting because not only is it Pepsi, but it's Frito-Lay. What is going on with demand for salty snacks as well as soda drinks? Let's move on to multifamily. I think there's a lot of evidence that multifamily is going to go through a couple of years of pain, right? We have obviously a lot of LPs and syndications that will be painful. There are also a lot of inventory coming, where especially in the Sun Belt, where we are going to see rents soften. But what is happening in construction spending, kind of back to my talk on Caterpillar, is you are seeing a lot of projects being mothballed. What does that mean? Well, while we have a lot of inventory coming in the next 9 to 12 months, I suspect once that inventory is absorbed, and it eventually will be, we're going to run into a couple of years where nothing's coming. 27, 28, right? 2027, 2028. Again, sometimes we've got to look up to see what the future holds. So again, it'll be very interesting with just how long of a gap or air pocket we create with lack of new construction. Let's talk about fake rich. Now, this was a survey done by Wells Fargo. In this survey, it did focus on millennials. I think it's a little unfair, frankly, to focus on millennials because as somebody in Gen X, I think we went through the same thing. But again, we will go through the numbers. And I ask you, if you're a baby boomer, or if you're Gen X, or frankly Gen Z, are you or your friends doing this? Or when you were their age, did you? Because I got to admit, I did all of these things and not proud of it, but maybe it's just part of the process. So again, what are the fake rich millennials doing? First and foremost, they're lying about income, right? Somebody asks them what they make, they just lie. What they are doing is taking on debt to seem wealthy, which is always a mistake. Folks, if you can't afford to buy it twice in cash, what the heck are you doing? Crazy. So again, 40% of millennials in this Wells Fargo survey have taken on debt to live a bigger life. That is never a good idea. 59% say it is important to appear rich. One of the downfalls of social media, in my opinion. Keeping up with the Joneses. Keeping up with the Joneses, I think, has always been a thing. Keeping up with your neighbors. Now with social media, we are constantly bombarded with highlight reels. And we think that we're always doing worse. So 59% say it's important to look rich or financially successful. We are really seeing a separation between the have and have-nots. And the haves, according to this article, are charging it up the wazoo, paying big-time interest. So again, I don't think this is a generational millennials thing. I think all generations, certainly I went through this phase where I bought the stupid car and the stupid this and the stupid that with debt, no doubt with debt. But yeah, it's not a good idea, folks. Don't live large on credit. That's not good. So what's going on with these March rate cuts, folks? Well, I think they're officially behind us. According to Bank of America, the chances of a March rate cut are under 20%. Again, it peaked at over 80%. So again, under 20% is heading in the right direction. A March rate cut would be problematic, and I've said that for quite some time. Now, of course, the market will pivot to May. What is going to happen for May or June rate cuts? Bank of America says the market, while not expecting a March rate cut, still expects 5 rate cuts. And at this point, the market is starting to bet that the Fed will be late. What does that look like? What does it look like when you expect 5 rate cuts and you expect the Fed to be late? Well, that probably means rate cuts won't be tinkering, right, meaning quarter points. They will be bigger whacks, meaning a half, or, heaven forbid, 3/4. Yeah, if we get big rate cuts as opposed to tinkering at the edges, it will be a sign that the Fed was late and that is not a good thing. And then finally, folks, let's get on to the Mr. Bull himself, Tom Lee. Tom Lee was being interviewed, I think it was on Bloomberg, talking about the Fed hawkish stance, no rate cut in March. This is what Tom Lee said. This is he's at Fund Street, I think. Yeah, Fundstrat, sorry. This is Tom speaking, not me, but this is him. I am more certain about a March rate cut after the hawkish Fed meeting. Wow. Talk about turning lemons into lemonade. It will be very interesting to see where this goes. Again, Tom Lee, as of last week, he may have changed his opinion, but as of last week was more certain about a March rate cut than not. So I find that very, very interesting. All right, folks, I hope you have an amazing day. It is Sunday, February 4th. We are less than 2 weeks away from the event. I do think we have a couple of general admission tickets left if you want to go. And of course, we have the virtual event, which I think is up to 69 members. I think we're going to go to 100. So there are 31 spots left for the virtual session. Don't miss out. Again, the agenda will be there. I will note that there'll be one change. I think we are swapping Bo small businesses with the lenders from Saturday to Sunday, as one of our lenders can't make it out until Sunday. So, folks, hope you have an amazing day. Take care of yourself. Bye-bye.